Trading without a plan is just like driving to an unknown place without having a map. It's literally a recipe for disaster. This is why before I get into any trade, I always make sure I understand the higher time frames and I'm able to align it with the lower time frames. And that is what gives me the confidence to use the 5-minute time frame for entries. And in this video, I'm going to share with you a typical example using Bitcoin. And in this video, the first thing I usually do in my analysis is I like to go from the 12-month time frame to better ascertain whether we're bullish or bearish. And as you can see, 12-month time frame is bullish. I scale down to 3 months, we're bullish. I go to monthly. As you can see, the monthly time frame is bullish as well. Now we scale down to the weekly time frame. And on the weekly time frame, we're still bullish as well. We're still creating higher highs and higher lows, higher high, higher low, and a higher high. So the only thing I'm going to be interested in is for a continuous move to the upside, and we'll have this low resistance liquidity resting at the all-time highs. And you can see how I always like to do this on every pair I trade. I write down everything on the chart: 12-month bullish, monthly bullish, weekly bullish, daily bullish. So I have no reason to look for a sell. And if we go to the daily as well, daily bullish, we're still within this swing low, swing high. There's no break of structure on the daily. So after price came into this position, mitigated that inefficiency. So we mitigated this inefficiency right here. So you can see the inefficiency. We mitigated this inefficiency here on the monthly. After that mitigation, all I'm doing is I'm looking for things that will give me an indication to buy. And one of the things I saw was this wicks right here. Price took liquidity from this previous low, creating a high resistance liquidity here. So the moment we created that high resistance liquidity here, which is a key level the price will find difficult to run below, all I'm anticipating is for price to mitigate this wicks, 50% of the wicks, which is a consequent encroachment. The moment I see that mitigation, I'm looking for a 1-hour break of structure from here. And if we go to the 1-hour time frame, you can see very clearly after that mitigation at the 50% of that wicks, price mitigated it, created a high right here. We created this high, and look what happened. We broke structure above that high. This is the high, this is the low. We broke structure. This was the last down close candle before breaking that structure. That's my entry. And as you can see how price nicely came into that entry position, mitigated it. That's the first entry. Second entry, I'm anticipating to see a 5 minutes, I'm anticipating to see a 5 minutes break of structure from here to look for a second entry. And if we go to the 5 minutes time frame, you can see how nicely after price mitigated that key level, it broke structure. So the moment that structure got broken, all I'm looking forward to see is a candle closure above this high. The moment I see that candle closure, you can see this right here. This candle closed above this high. The moment it closes, I'll put a limit order at this high right here so that any retracement will activate me and take me to the upside. You can see how nicely after price closed here, after we closed right there, right here, the moment we closed, the next candle opened, dipped below this high, activating the entry, and the next thing we saw was a rally, an expansion to the upside. And if we go to the 4-hour to see how that played out, you can see very nicely how price exploded to the upside straight into the take profit position. Now the take profit position is low resistance liquidity here, inefficiency here. I always use either one of the or both. I'm either using the low resistance liquidity as my take profit or I'm using an inefficiency. But I love to see when the two lines are at the same area. It's a high probability area for price to draw into. So if you found this insightful, feel free to give it a thumbs up, or you can follow me for more. I'll see you in the next one.